Tuesday, December 20th, 2022, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at whether the Bank of Japan has just triggered a massive global sovereign debt crisis, and I'm not trying to be clickbaity or anything, because I've warned about this before. But before we look into this, we're going to go through some of the questions from last week. Let's go through the first question. It's from long-haired fool Jim. He asks, and this is from the currency reset will wipe out creditors. It's the part 2 video with Clive Thompson. Great conversation. A query I have: if they're going to reset all at the same time or very close to the same time as theorized, does not this require coordination between all central banks? As if not coordinated, one bank could go for a reset in response to a crisis at a time when many other countries are not prepared in terms of the technology, legislation, real-world practical rollout. I would say a lot of the major central banks and the central bankers, they are coordinated. They meet every other month at the BIS, the Bank for International Settlements. So they're on board. They're playing the same game. As per legislation, you wouldn't need legislation really. A reset would be something to do with market intervention. So I don't think it would be a problem. And I would say the smaller central banks would just follow along, or they might be part of the BRICS, which could be separate. So that's my answer to that question. I hope that helps. For the same part 2 video with Clive Thompson, this is from Tony De Bruyne. I hope I pronounced that correctly. How will governments finance war with a new CBDC, since war was the cause of massive currency inflation? Should war just be made illegal and there not be a currency reset? A bit naive perhaps, but imagine if that were possible. Well, yeah, wars are made possible, like especially big wars like we've had in the last 100 years, when they suspend sound money, because with sound money, with an honest money system of gold and silver, governments run out of money very quickly. So they institute or they suspend convertibility during wars. CBDC, it depends what they were going to back that with. If if it were that they were going to make a CBDC actually sound money, which I doubt for now, they could have wars. And they just have to scare the public quite a bit, and the public will go along with it. But I'm not too sure they'll succeed, because they're not succeeding right now, because we've got a war right now. I know it's between Russia and the Ukraine, but it's a proxy war and people are getting fed up. We're paying for it. A lot of it, we're paying for it through the cost of living crisis. I think the cost of living crisis, though, would have happened no matter what. So I hope that answers your question, Tony. Question 3 is for the same video, the part 2 video. And again, I thank you a lot for your interest in those 2 videos with Clive. They've been really successful and helped the channel. So this is from PS. Do you want to buy those energy and agri stocks before the market shuts down, or as soon as it opens back up? And was the public advised ahead of time that they would reopen on March 14th? Could a person put in a buy good until canceled order, which would execute upon the market opening? I'm not too sure about which date that is. Maybe we spoke about this in the interview. I don't remember it. But I would say, having worked in the markets for 20 years, if there were to be a major crisis and everything shut down for a week, and they institute a new currency or something, I think you'd need to check with your broker to see if you still got your GTC orders or good till cancel orders. And yes, but holding the stocks through the crisis, I think if it's in your name with the broker, they should be there. Of course, there's no guarantee, and that's why third-party investing is risky, and that's why I've told people to have a little bit of gold and silver outside the system. Yes, let's say they wiped out all the brokers and everything. I'm not sure what would happen to your stock holdings. It will probably take a long time to like rearrange everything and give you back title to them. But once they reopen, if you have some gold and silver, you can always cash them and start investing again. That's the way I see it. This is from the picture drone for the same video. Do you think stamps in the UK are being barcoded to prevent them from being a future store of value or medium of exchange? I haven't really noticed, and I haven't looked into that. Actually, when I was a little boy, I did collect stamps, and I still have them here. I'm not sure if they're worth that much. But no, I think if people like stamps and they're collectible, they will always have value, even if they have barcodes. Who knows? But I couldn't tell you. Sorry about that. So the fifth question from DA, how do you feel property will go in the backdrop of the depopulation? I'm not too sure about the depopulation. Yes, there are studies out there that say by 2025, the populations of the US and the UK will be decimated, but who knows? I guess theoretically, if there is a depopulation, as you say it, there will be less people and more homes. It could drive the price of housing lower, but here in the UK, there's a shortage, I guess, of bedrooms, of homes for people. So yeah, that's what I would say about that. We'll go to question 6 and we'll stop here and get to the main topic. This is from Skip Herndon for the same video. Thoughts on where Social Security will end up after the reset under CBDC, since a mortgage and promissory note in the US are in dollars. I don't understand how the government could restructure the mortgage. Great video, thanks. I don't think the government will restructure the mortgage. It will just be in a different currency. I'm not sure the government will be involved. As per Social Security, you still be getting something, but I would say it won't be. It will be in the new CBDC if there is one, and it probably won't buy as much as you could have 5, 10, 15 years ago. It's happened in countries like Brazil. They've had 4 or 5 different currencies in the last 40 years, and people are still getting their Social Security. I know that because my mom gets some. So back to the sovereign debt crisis, or the global sovereign debt crisis. And you might think, well, how can you know this and that? Well, first of all, I worked in the bond markets for over 20 years. I was a futures and options broker in the global government bond market. I traded all kinds of futures like treasuries, bonds, BTPs, the Italian one prior to the euro being formed. And back on the 19th of August this year, I warned UK sovereign debt crisis could be imminent. And lo and behold, just over a month later, everything erupted. Sterling crashed to an all-time low of 103 versus the dollar. The gilt market was in meltdown mode. The defined benefit pension system in the UK was almost vaporized, and the Bank of England had to step in and bail out the system. The problem is it's getting longer and longer in the tooth, this QE. And as you can see from this chart here, after the '08 crisis, it was okay to do QE because we're still in a bond bull market and yields are going lower. So the Bank of England and all the other central banks they could do as much QE basically as they wanted to keep things going. But now, with the bond market being the bear market, and I warned about this as well on December of 2020, I said I thought the 40-year or 39-year bond bull market that started in 1981 was over, and that yields and interest rates are going to rise. In that environment, as you can see here now, I think things are unraveling again. And I even made a video after the Bank of England intervened and things calmed down, saying that the gilt market and the Bank of England were not out of the woods. And as you can see here, yields are going back up. And the only thing QE will do now, because that's what they're going to be doing when there are crises, when things blow up. They're going to come in like a fireman and try to put out the fire, but they're going to try to use petrol or gasoline to put out this fire, and it's going to make the currencies get debased even more. It's not going to help, and if they really want to keep interest rates and yields low, they're going to have to do massive QE, and they could succeed with that, but it would totally destroy their currencies. And by that I mean the price of gold and real things, and even stocks would probably fly. That would be the crack up boom. And even the FT, as you can see here, I watched this presentation they did yesterday, fractured markets, the big threats to the financial system. It's interesting that they mentioned this yesterday, and today the Bank of Japan changes its basically it's broken. The peg is broken. The 10-year JGB peg at 0.25% has been broken. Basically, they've lifted that peg, the BoJ. This is huge. So right now, the 10-year JGB yield is at 0.4. The high has been 0.47. And actually, I started recording the video for this morning, and I was going to warn about a global sovereign debt crisis. And then when I was doing the market review, I noticed that the Bank of Japan had done this. So I had to rearrange or redo, re-record my video. This is huge. And I think this could be the trigger for this global sovereign debt crisis. And in my previous video, I said it could take weeks, maybe a month. Difficult to know. I think it's actually been triggered here by the Bank of Japan. This is massive. And as you can see, bond yields all around the world are continuing to rise this morning. The situation is dire, I think. What does that mean for the stock market and the bond markets? Well, continued weakness. I think the best thing right now is to have quite a bit of cash. That's if you're trading, of course, and you have stocks. I think you need to loosen a little bit your positions. That's what I think. And even if you have the miners and you think the miners are going to do well in commodities, well, that's up to you. I've got a bit of cash. I still have some of my miners, but yes, having gold and silver outside the system is will make you sleep very soundly at night with what's going on right now. That FT report, I watched that. It's a 25-minute video. They're warning about things that I've been warning for years. And even the sovereign debt crisis, I warned a month before. But they seem to think that the solution is for central banks to come in and basically put out these fires. So this is what they say. I took some notes. Policymakers will have to step in, and by policymakers, they mean the government, the central bankers, and they should be prepared to save pensioners, investors, homeowners with big mortgages. So what I think will happen, as you can see by the Bank of England action here, on this chart of bond yields. Yes, it helped temporarily yields come down, But now we're going back up. And this chart is from yesterday, so that's even higher. You can readjust that. That yield is rising even more. And yes, they might be able to do that in all the major government bond markets, because they will need to, because the JGB market and Japan are huge. Yes, they're mainly focused on domestic investors, and the Bank of Japan owns most of it, but it affects every other market in the world, the JGB market, and this is massive. And so the other thing they say, the FT, and it just goes to show how you should own gold and silver, in my opinion, is that U.S. Treasuries will be the next safe haven. But U.S. Treasuries are on the same boat as all the other government bond markets. It's a global sovereign debt crisis. I think this is the blow up. They say it here. It is naive to think we can get out of the low interest rate environment without some sort of blow up or crisis. So there you go. So I see the Fed, the ECB, BoJ, Bank of England maybe having to do something. Maybe not the BoJ, but the other major central banks. They're going to have to step in and they're going to say, no, we're still tightening. We're still doing QT, but this is temporary, right? It's just the firemen coming with the with more petrol to put on the fire. And why doesn't QE work anymore? Well, because the cycle is turned. There's nothing we can do. After the '08 crisis, it was very easy. They could do QE in a low interest rate environment. But I think it was Margaret Thatcher who once said, why did this happen? Well, because it just did. It had to. Nothing lasts forever. Easy money doesn't last forever. At one point, we're gonna have to pay the piper, or Shylock will want his pound of meat, and I think that's what we're going through. So, yeah, I would say this is a momentous day for the whole system, and batten down the hatches. So that's what the FT as well said. Was the UK just a precursor? You bet it was. And the party is going to start now. Well, not the party, of course, but the global sovereign debt crisis seems to be here. So nice Christmas present from Mr. Kuroda in Tokyo, but it was bound to happen. This peg couldn't last. Some people think that central bankers are omnipotent, but they're not. The markets always win in the end. So with that, let's quickly look at the markets, see where they are. So it's 8:30 a.m. London time. Gold is up $10 at $17.97. High's been 99, low's been 84. Silver is up 15 cents at 23.12, up 2/3%. High's been 25, low's been 86. The Dow is down 150 points. NASDAQ is down 89. The S&P is down 25 points, or 2/3%. To the currencies, yes, this is when I saw that things were unraveling in the bond markets this morning, and I had to start again my video. Do you know what the Japanese yen is doing this morning? Well, the dollar is down 3.4%. That's how important this is, at 132.20. The other currencies are pretty steady, so it's a yen thing. The dollar is down as well, 0.25% versus the yuan. So we'll quickly go to the other currencies here. Aussie dollar is down 0.5%, 66.70. The dollar is up slightly versus the Canadian, 136.59, and the Kiwi dollar is down 1/3, 63.43. What about the commodities? What are they doing? WTI crude is down 0.75%, 74.83. Brent is at 79.40, down 0.75 to. High grade copper is down 0.5%, 3.76, and U.S. nat gas is down 3% at 5.57. let's quickly look at these bond markets. And yeah, because things are really going crazy here. The 10-year yield is up 7 basis points at 356. The high's been 371. Don't forget, recently we got below 350. So liquidity is another thing we need to watch for the U.S. Treasury market. To the gilts, I showed you those charts early, and it's gotten even worse. The 30-year now is almost up to 4%. It's up another 14 basis points at 397. And just wanted to talk about the other markets here, not just the U.S. and U.K., the Italian bond market, which is a bellwether for the trashy government bonds in Europe, I would say. It's at 447, the 10-year. It's up 10 basis points. And then if you look at the German bond market, which is the benchmark for government bonds, it's not as trashy as the Italian. Well, the 10-year Bund yield is up 9 basis points at 228. So, yes, I think this is serious. The Bank of Japan peg has been broken for the JGB 10-year yield at 0.25. Zero Hedge thinks they've basically moved it up to 0.5 now, and that's massive. You might think, well, it's only 0.5%, but it's a doubling of it. They basically tightened the Bank of Japan, and it's serious. So, with that, I wish you all a great day. Take care. Bye.